Good weekend all. Ira Epstein of Linden Associates with your SPDR ETF wrap-up, your weekly edition, and this is for Friday, the 27th of November, 2020. So an interesting week. The stock market on fire, metal markets coming apart to the downside, currency markets basically moving higher, bonds and notes getting a bid in the marketplace, and energy's held on to very strong gains. So let's go and take a look. Now remember, these are going to be the weekly charts. So we'll stay with the tech sector, but I'm thinking of rolling away from this, putting in some others and rotating this. I think it'll be more fun as we do these from week to week. So don't be surprised if I start doing that. But as we look at the market, this is what we call distribution on a chart. You got that high, that low. You've stayed within it for, and this is a weekly chart, for several months now. When we take a look at the current action, you've got a pattern of higher lows, higher highs. We had an outside week up. When I see an outside week up, I go like this. Okay, now I'm interested. Because what I don't want to see is the low of this week taken out, and that number's 119.04. Why? My theory, it's my rule, is that if you take out that number, you drop down to the closest moving average under it, or the Bollinger Band, the closest of. So let's put on some moving averages. It would be here. The Bollinger Band's going to be down here. 117.06 would be the number. That's if you take it out. What if you don't take it out? Well, then I'm looking for the market to advance. To what number? One of the numbers, there are several, but one is the upper Bollinger Band. So the 125.33 level would be that. So basically what I'm saying is the trend is up. You have higher lows, higher highs. The bias is up because you're over the 18-week average. The resistance point's 125.33, and momentum is pointing up as measured by the slow stochastic indicator. There's two numbers that make it up. They're called a K and a D line, red and blue. The whole difference in the lines, in one uses in the formula 3 days, or in this case 3 weeks of data, and the other uses 5. That's the whole key. If they're dailies, 3 days, 5 days. If they're 15-minute charts, same thing. 3 15-minute periods, 5 15-minute periods. XLI. Now we have 3 weeks in a row of over the upper Bollinger Band. My rule on this is simple. When you have an embedded reading, which you do, that can keep the market going, but typically no more than 5 weeks of staying over it before you're going to roll over. Typically no more. Just staying over it is difficult. When I look at the Bollinger Band, the theory is that the market will not stay above or below the bands more than 5% of the time. I step further with it. I count each consecutive close. As long as I get more than one, I then subtract the first time you're over it, the second, and the third from the 5% of the time. Each one's 1%. That gives me coming in for this week a 2% chance of staying over that number, or a 98% chance that you're going to fall back. You'd say that's bearish. No, that's a sign of strength. Generally, where you see the weakness is when you first hit the band and you bounce away from it. That's the way you look at these. Typically, the pros will come out. I would tell my written subscribers, take some money off the table the first time you hit the band, and I use this word, jam your stop way up at that point. And you're hoping you get one of those runs, but don't count on them. If you do, you're going to be sorry. They're far and few between. Energy sector, you've gone from the lower Bollinger Band to the upper band. That's not indicative of a market that's going to run further. So I think this market knocked out the shorts. It's moved on its own up there. I would not be surprised that after we get the OPEC announcement, OPEC meets tomorrow, OPEC Plus, they call it, because Russia will be involved in the meeting. They're not going to meet face-to-face. They'll do it virtual, the way we all do business now. And they'll look for that meeting to, I think, end up saying, you know, we don't have to go ahead with the January increase in production. Why don't we give ourselves from January another 90 days or whatever, and we can always meet each month or every every other month to assess the situation. Something along those words. And the market, I think, is building that in. OPEC saw this coming. They had to. The COVID is very serious in Europe. It's certainly very serious in America, and it's going to hit other parts of the world as it just keeps spreading. There's no stopping it at this point in time. It's going to run its course until the vaccines get out there. QQQ. Another outside week up. I love when I see those because it gives me more confidence that if that number's taken out, the low of this week, either next week or the week after, then if we peak here, as I would expect to run into serious resistance, just the way you have each and every time you've gone there, that a decline back to that 18-day average is ultimately in the cards. Do I want to be ahead of myself? Not in your wildest dream. I'll trade it after I see it. I won't anticipate it. Anticipating gets you hurt in futures. Trend up, bias up. I'm looking for resistance, 301.36. Haven't hit it. $3.17 was the high so far. EFA, the emerging markets. 1, 2, 3. 3 weeks in a row, not here. Over that upper Bollinger Band, not embedded. The odds of this market falling quicker than the others, it's there. We know that the trade, I use the word trade, it's everybody on TV, it's every news article, the market letters, everybody wants to be long the emerging markets now that vaccines are ready for disbursement or very close to it. And that's what you're facing with that part of the marketplace. Let it come to you on your terms. If you just jump in, where do you put a stop? Under the most recent low? That's not my cup of tea. What I am seeing is the market, the 18-week average is about to cross over. You can see this. The 200-week in the gray, 65.44, and then we'll see when the 100-week gets there. But as I said before to you, and I'll say it again, I expect this to be a long-lasting bull market. In GLD, trend is down. You've hit a downside target this week. That number, you finished off today at 167.79. 170.47 is the lower Bollinger Band. You only stay outside of these bands 5% of the time. You're oversold. I'm looking for short covering. Would I tell my clientele to go short down there? Not in your wildest dream. I don't care if I'd miss it. I think I've been right on GDX, that non-tradable with the higher high, lower and low on the weekly charts. On the daily charts, I've pointed out that it's bearish, and it's staying bearish on the weekly, but you're stretching it out now. You got 2 weeks in a row under that number, not an embedded reading or even approaching it. It's like a rubber band. You're going to pull it too far. Could you get to 29.41? Anything's possible. Can the market bounce here? Yes, but it cannot turn bullish from this pattern. That it cannot do the way that I teach charting. Silver market, is it going to make it to the 2053 level? It did a lot of damage this week. You took out a lot of lows that shouldn't have been taken out. The funny part is that for the past 2 weeks, you didn't activate anything bullish. I needed on the weekly charts to get up and stay over that 18-week average via my special silver report. It did not occur. I didn't get the buy. I got the buy, let me take that back, on the daily charts, and I ended up on those trades, as my subscribers know, taking great profit on one, and on the other, I put a break even including commission for the whole trade, and it got stopped out way up there, and I just called it a day. I said, there's something not right. When you're wrong, if you can walk away even, that's a pretty good trade. Did I get smart enough to catch the break? No, and shame on me, because that chart is bearish. It got itself bearish, very frankly, when you took out 21.92. That was the ball game. Now you got the lower lows, lower highs. You are oversold, but that's where the downtrend kicked in. TLT. The market keeps holding the lower Bollinger Band and giving you that bounce up. So do you want to fight the Fed? We have a FOMC meeting coming up in December. I can't imagine that the Fed isn't going to target some of the longer-term instruments because they've been trying to add something to the market there. Even the short-term, not the 2-year, but the 5-year got a little spunky. They can control that one, 1, 2, 3. So I'd be surprised that they don't target them to keep everything very much under control until the market gets its legs under it from this COVID-19. While they're going to say most likely that they're optimistic with all they're hearing, they cannot be saying that they're not concerned until that's out in the marketplace. I think they're going to be that way. Is the economic data bad? No, the economic data has been okay. So I'm not seeing the economy reeling from anything. Last, in the euro currency, you've got the higher low, higher high. I'm looking for the resistance at 112.71. I have been, as you know, bearish on the daily charts for the dollar index, trying to be long a number of the foreign currencies against it. And my subscribers know how that's done. So we'll leave it at that. The slow stochastic still up, trend up. I'm looking for resistance there. As long as this week's low doesn't get taken out in the next 2 weeks, I think the pros will buy the breaks with the stop under that number. So we talk about what I do in the ETFs and so on. Let me tell you how this works so that you get a play. Well, typically by 5 in the afternoon or so, I'm publishing, except for Friday. Friday, I take it easy. I can afford to. The markets aren't opening on you right away in the futures or anything else. 5 videos a week on what the ETFs are doing on a daily basis. And I try to cover, it was 34, we're up to, I think, near 40 ETFs now. I keep adding them. I know I'm adding PAVE, P-A-V-E. That's coming this week. Why? Because I like infrastructure plays, and that looks to me like an interesting one of the spiders. If you have others that would follow on that, I'd like to know them, but they got to be ETFs or spiders. You can write me, obviously, at iepstein@linn, L-I-N-N, LLC.com, or if you watch this on YouTube, you can always put it up there. I do read what's going on. I cover all this, and then on Saturdays, I put out a weekly video for the subscribers. So tomorrow morning, first thing when I wake up, you know, it'll be later in the day, in the morning, but you're going to get a full weekly version. And what does the weekly version of that do? Well, it covers everything, but with a lot more data than I bother to put out here. And that's the beauty of it. Specific: buy here, sell there, do that, do this. That's the idea of it. So when you think about the cost, let's talk about it. $8.95. So I put out 26 videos for you a month in this subscription. Is each video running you 35 cents? You spend more than that on what each day? And now here you get some real, I think, real serious technical analysis. You decide if it's worth it, but if you can't afford it, I'm not giving it for free, I can promise you that. And I don't think you'll find services as low cost as I am with the quality I have. Go read some of the comments on our website. I'll keep putting more up because a lot of them keep coming in, and you see what people say. I'm Ira Epstein. You have a great day, and I will talk to you all come Monday. Take care now.